Today's episode of Market Talk is brought to you in part by Grow Market. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Wednesday, August 11th. Great to have you here with us as we are broadcasting live from the NCBA convention in Nashville, Tennessee. Jesse Allen with you here. Thanks for making us part of your day today. And thanks for tuning into the show. You can find us online, markettalkag.com, as well as all of our streaming sources there, Spotify, Apple Podcasts, iHeartRadio, so many more. It's all online at markettalkag.com. Well, we are under 24 hours away from the big USDA report, I should say here. A lot of talk about that here at NCBA. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics to talk about the day's trade. Mike, good afternoon to you, sir. And, looking at the market trade today, you and I were discussing it. Few things to unpack, but really kind of a quiet day ahead of these USDA August numbers coming out tomorrow.
Yeah, and I'm hoping that that's the case as we go through the report in terms of the macro fundamentals. I really feel like, Jesse, the supply-demand fundamentals are shaping up pretty nicely. We're getting confirmation of lower wheat supplies in Russia, in Ukraine, issues in China due to their flooding a few weeks ago, and also lower supplies out of South America, especially when it comes to the corn and when it comes to both Brazil and Argentina. While Argentina's stocks are very, very high in corn, at the farmer level, they're not getting it out the door because of their drought issues that continue to really pressure them and push their freight rates higher. So we're kind of in a catbird seat more than we've been probably in the last month when it comes to supply-demand fundamentals with these tighter supplies. And I'm not even talking about U.S. yields at this point in our conversation. And I think the other thing that's really been welcome has been the demand side of the equation coming online with a lot more daily export reports, corn and beans both, corn mainly to Mexico, beans mainly to China. That's exactly what we need right now. It would suggest to the marketplace that the prices have fallen enough. And with these other issues that I just mentioned, the United States is back in the game. And I think we're real close to getting back in the game as well on the wheat side of the equation, because the French wheat price has been going straight up essentially at their major river, the Rhone River. It's gone essentially from about $272 a ton a week ago, and it's upwards of $285 a ton. So it's actually running over our price right now. And the same thing can be said about some of the higher Russian wheat, the 12.5% protein wheat in Russia is getting up towards $290, $295 a ton last I looked. So I like what's coming together as we go into the USDA report on Thursday. What I'm really hopeful for is that they don't throw any really negative demand curveballs at us, and that the macro conditions really kind of calm down, because that's what we really have fought. And you and I talked about that at the end of last week.
Well, and looking as well, let's unpack a few of these things on the demand side. I think a lot of us are waiting to see this demand picture ramp back up a little bit and how that could carry us through some of these yields and different things we're looking at. And I know you and I were talking, I was very interested in the CONAB's number for that Brazil corn crop and how much they lowered it here this week. Reflecting some of those supply challenges we have there. And now looking to the USDA numbers, a lot of people are wondering, will we see a reduction in our corn crop and our bean crop? And you look at how that ties in with already tight stocks, the demand side. I think a lot of folks are very curious to see if demand ramps up and we start to lower some estimates. That's going to create a really tight, really interesting situation.
Yeah, and what I'm hopeful of is at this point, the United States Department of Agriculture, when it's all said and done, we may see a more negative report on the U.S. side of the equation, especially because of old crop stocks of corn maybe going up. But that is offset, or more than offset, by tighter world-ending stocks again, not unlike what we faced in the July report. And I think corn and wheat are especially noteworthy on this month's report again too, Jesse. I think those CONAB numbers, I just talked to my South American colleague about some of the numbers that we are looking at right now. You know, USDA for corn example is at 93 million tons. CONAB came in at 86.6, I believe it was. So you're 7 million, roughly 7 million tons less. I think it could be closer to 10 million tons less, which ends up being about 400 million, 430 million bushels. If that's the case, I'm less worried about old crop carryover going up from, say, 1065, 1090 area that USDA gave us up to maybe 1200 plus. I think you do have an issue with your exports on the 2020 crop year. We're running at about 91% of USDA's 2.85 billion bushel number. We're not going to make that, I don't think, at this stage of the game. So I would expect the 2021 numbers to come in and maybe beat us up a little bit. But then I'm hopeful that the world numbers offset that for those same marketing years. And then the wide open question is the yield. Is the USDA going to look at the crop conditions, look at the drought monitor, look even at the vegetation index that they normally look at this time of year and bring that big yield down in corn especially? I just came out with my final corn yield numbers after everything I've looked at and did resurveys in some of the cornfields in Nebraska and Kansas, and I went down to 174.9. That's on the very low end of anybody I've seen so far, and that's mainly because these western Corn Belt states were tipping back, and we did not have a good pollination in the heat from what we were expecting, and I don't think we can carry the water for what we've lost in the plains and in Minnesota.
On the soybean side, Mike, they started strong today. We were higher overnight, and then you look in that August contract getting ready to expire. That had a big drop, and that maybe was a little bit of an anchor on the day. But overall, I mean, the rest of the bean contracts, we were fairly mixed, right around unchanged. So talk about what you saw in that soy market here today, especially after a strong overnight again and then getting through the day today.
Yeah, one of the best things that's happened for us in the soybean complex, Jesse, is not just the dry, hot weather here in the United States, but it's been more importantly refocused and realigned back on China. The producer price index for China is nearly 10% right now. That means the producers, the crushers, are just getting pummeled by higher inflationary prices. But by the same token, streaming down the supply chain, they're starting to see a real improvement in their crush margins. Their crush margins have gone from deep in the red back up into positive in two of the major provinces I keep track of. And I think this is in part why we're getting some of the soybean business again from them, along with the higher Brazilian price. So I think going into the report, while our crush margins here domestically have not been able to really get back to where I wanted them to be at this stage, we're still dancing around 65, 70 cents a bushel on crush here, and I'd like it to be more like 90 cents to $1. I think the foreign crush margins in China are really starting to come around, and I think that opens the door up for the soybeans to have a better demand base. Now, we have to offset this somewhat with whatever USDA gives us, and that'll be the job of the market after Thursday afternoon. I think the biggest problem with soybeans is also China, and we saw that early in the week. While we've got the soybean side of the equation, the crushers coming around, we saw Goldman Sachs and JP Morgan both cut their GDP numbers for China. Why? Because of COVID and that COVID spike that they're having, just like we are. And Goldman Sachs actually came in, I believe it was just around 8.3% for this coming year and this current year. And that's a lot lower than the trade is trading right now. And so China has actually been kind of a leader to the downside, and that's what's kind of spooked the dollar higher. And that's what we really have to watch. So I feel still pretty lukewarm about the soybeans, but I don't think they're negative against the corn since that last report. So I'm hoping that the wheat and the corn have kind of their day in the sun and soybeans kind of stays out of their way.
Let's talk some outside markets before we move to livestock. I know you mentioned to me the CPI. We should talk about that, I think, and a few other things. What are you seeing outside market-wise here that's impacting our commodities we need to watch this week?
Well, I think the CPI and the outside markets and like the Tyson earnings all kind of come together along with what I just talked about with the Chinese GDP and the emerging markets and the Asian markets especially getting hit, led by China. But when you see Tyson reporting their earnings this past week and you see that they raised their price in the last quarter by almost 40% for pork, 16% for the chicken, and 12% for beef to restaurants. And now they're talking about they're going to go after the retail market as of September 5th, they're going to raise prices for what we pay in the grocery stores. You're not going to lose this inflationary pressure. And I think that's maybe a nice way to dovetail into the livestock, into the meat complex, because I do think we're kind of, while the hogs have had a very nice correction, and I think I want to say that the October hogs are probably undervalued right now compared to the cutout and the bellies, especially the fat cattle and the feeder cattle look to have quite a bit of premium because the school opening is so uncertain. We're closing out the summer grilling season and we're limping. That's the bottom line for me between the price and the COVID Delta variant spike. We're limping on the consumption side. It's still very strong, but it's not strong enough for the packers to pay up yet, I don't think.
Well, and you mentioned the hog correction. We saw that here today. Hogs have been taking a beating. But on the cattle side, I'm at NCBA, obviously. A lot of talk about some of those things you just mentioned. And obviously looking, at the demand side and wondering what this Delta variant is going to do and looking at domestic consumption and consumer consumption. There's a lot of discussions going on here in Nashville about that, Mike.
Yeah, and I think there should be, because I'll give you the feeder cattle rundown real quickly, and I'd like to hear your ideas of and thoughts of what guys are telling you. But cattlemen are calling me a lot more this week, both about buying corn and getting feed locked in. Finally, they're seeing what I'm seeing as far as the upside potential versus if it goes down 20, 30 cents, who cares? But if it goes up 60, 70 cents, that's going to hurt. But in the feeders, that feeder corn ratio has now gotten up to a new 2021 high as of the end of last week, beginning of this week. That's a warning flag. The monthly charts on the feeder cattle, as far as the funds and the investment, those look very overdone, and they're flashing sell signals right now, Jesse, very similar to the same sell signals that I saw in the hogs about 2 weeks ago or so. And I think the most important thing is September feeders right now, they are running $7 ahead of the cash index, and at 165, 166, you're talking about being at the highest level for September feeder futures, just that contract alone, the highest level since November of 2015. I think you bank the money and you hedge and you just use good old-fashioned risk management for what you got to sell between now and November, December, and just get it done. And there's some really good bought puts out there, in my opinion, that you can put in a known cost floor and kind of walk away and then manage your cattle better.
Yeah, that and one of the things I'm hearing here too is there's a lot of concern just with the drought and some of our producers out in the Western Plains and Northern Plains having to decide: do I liquidate cattle? What do I do here? Do I go and sell? I mean, so there's a lot of conversations around that storyline, and then obviously, like you said, the upside potential in this market, and I feel like there's a lot of nervous excitement about that potential, but also you have to be smart about that potential.
Yeah, this is where I come from in my management plans with commodity hedging in general. I like to make a profit per head and profit per acre. I may leave some money on the table and it may go higher, but if it does, that means my next quarter should be even a better profit per head and profit per acre. Well, turn that upside down and flip it around. What if you don't do anything and don't lock in a good profit per acre, profit per head? The next quarter may be worse. So that's where it really comes back to. You got to manage your risk here quarter by quarter, because we've got a lot of policy decisions being made with a lot of these bills in Washington. A lot of this has to do with energy and climate. A lot of it has to do with fossil fuels. And then we have the livestock herd supply numbers. And then, like, as you say, we have the drought. So I guess I'll throw a question back to you. Have you heard more questions or more comments from cattlemen about locking in their feed, or how they're making good money right now on their feeders and fats and not sure what to do?
More lock it and feed.
Right.
That's been the big thing I've heard here this week. Is I think everyone's looking at that relationship between the corn market right now and cattle and lock it and feed, or whether they're looking to do wheat or something else. And so there's a lot of coffee pot talk about that down here, Mike.
That's good to know, because I think what's important about that, it tells me that the cattlemen, the ranchers, understand that the funds really have a big role to play in their lives through that feeder corn spread. And that's something that I've really tried to drill out. And I'm not saying that I did it all by myself. A lot of people look at this, but it's something that we as analysts have to keep getting out there to producers in both farming and in ranching, is that the funds really can take control of this market. Look at the hogs this week and earlier last week. We're looking at brand new fresh highs, all-time highs from what I can tell in the belly prices. And we've got pork cutout values hitting levels that would suggest we should be at $110 hogs. But guess what else we had? We had the second longest net long position by the non-commercial traders in the CFTC report last Friday, and that to me was just a bell ringing thing to say to them. Let's take our money and run because of the seasonality of this market. So that's where the funds versus the fundamentals come into play, and we really got to be smart and play it that way.
Mike, any other final thoughts you have for us here today, or anything else you want to mention ahead of that WASDE report tomorrow?
Just have safe travels, and thanks for having me this week, Jesse. We'll talk to you again next week.
That sounds good. Mike Zuzolo, president of Global Commodity Analytics. You can find him online, globalcomresearch.com. Sign up for the free trial of his newsletter, much more. It's all there, globalcomresearch.com. This has been the Wednesday, August 11th edition of Market Talk, live from NCBA Nashville. I'm Jesse Allen reporting.